Hello everyone, Kim here from the Traders Club, and thanks for tuning in another episode of Midweek Update. Hope you guys are enjoying your fall weather so far. Today is October 21st. It's around 4:30 here, 4:30 p.m. in the Twin Cities, and today we're gonna start with the semiconductor. I know that I talked about semiconductor maybe a couple like back in September. uh, Regarding how I thought that the semiconductor might save this market, and I made a video about it. You can go back to my blog and check that out. And today, a semiconductor is actually giving us some relative strength compared to other indices, which we'll be covering today. All right, we'll be looking at S&P 500, Dow Jones, Nasdaq, Russell 2000 as well. So we'll start with the semiconductor. I think looking at semiconductor, daily, weekly, monthly is very, very important. I think this is the index that we want to follow. It could be leading the market to the upside here, so we'll go through that. First of all, let's just talk daily chart. First of all, obviously, looking at this, there are some important levels that you want to keep in mind. As far as the semiconductor is concerned. When we actually go to market vector semiconductor ETF, some of the pivot levels are kind of a little bit more on point than SOX, which is semiconductor index itself. This is actually more of an ETF, but we'll look at this for a second here on the daily chart. Obviously, this is a very, very important level. Do you see that red line going across? It's about 52, 53-ish on the semiconductor ETF. Very, very important pivot. Why? Because it has acted as resistance in the past, and then it flipped back, acted as support. We hit it here again. We came down, got back up, and then we stayed here for a little bit. You can see that he trying to get back up here, failed. Well, we did get up for 3 days. We failed. We actually trying to reverse back up, and then that support act as resistance for about a couple weeks, and we just pinged. Got up to about 50 MA, came down. Instead of coming down, creating a lower low, what did it do? It actually created a higher low. And something that I've been talking a lot in these videos, if you've been following me long enough, you guys understand that these lows and highs are very, very important when you're wanting to understand the sentiment of a trend. Obviously, we're still on a downtrend at this point because we had the downtrend coming right here. You can see that there's a resistance, and hit the resistance. Let me just clear everything and just make this right there. You can see that how well the resistance has been pretty strong. A lot of sellers you saw at that level, and you can see boom, 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 and then finally we broke above there. We gapped above. That's the level when you can see all these moving averages, right? You see 10, 20, 50 MA all crossing back up. That was kind of a pivotal moment for the buyers actually looking at the semiconductor here. That was a pivotal moment because not only we gapped above this resistance, but this was when we finally kind of gotten above that 50 MA on this daily chart. You can see that pink dotted line just kind of got above it, came down a little bit, hit that 10 MA, and then we got back up. Currently that 200 SMA seems to be acting as a short-term resistance that could possibly become some kind of a bearish dark cloud cover. We're not sure yet though at this point. If we see a little bit of follow through, then what you want to see, follow through to the downside, is what you want to see is this level holding. Many times this is what pivot does. We break above the pivot, and then a lot of times they'll come down and retest these pivots as a new support before going higher. So there's a good chance where it goes up, comes down, goes up, we break that pivot, comes back down, obviously, and then kind of 50 MA, 20 MA getting up here, and then hit this level again, and then gap back up. That might be a potential scenario going forward here. We have 2 more days trading session this week, and so that's a level to watch. Obviously, we don't know that as of today. We have a little bit of bearish candle. It could even come down a little bit, and then we hit that 10 MA and then just get right back up. So at this point, hard to say. In micro term sentiment, obviously we got possibly a little bit of a bearish sentiment going into tomorrow, but the semiconductor is actually positive as of today, how it closed, and so we're above all these moving averages here. We're just kind of retesting the 200 SMA on the daily chart there. So average sentiment is concerned, this was very, very important. If the sellers wanted to really break this thing down and really want to make this as a potential topping pattern, I think this is a level, possibly like, I think right here, when we had the resistance, kind of bring it down, gap back up, and then we continue to cultivate lower lows and lower highs, thus, commencing a downtrend. They were not able to do that. Now with the higher lows intact and higher highs, we are actually cultivating intermediate term uptrend there. A weekly chart is important on the semiconductor because obviously we are still in a primary term uptrend. You can see that right there. That support has been holding at this point, and also I think a lot of people are looking at on this weekly chart potentially left shoulder head, possible right shoulder, that could potentially be. But again, we talked about it last video on the semiconductor video. Well, a lot of times people always assess the situation kind of in a rush, where that without the confirmation, these formation can form, but without the confirmation, they mean really nothing. You can see with a head and shoulder formation here, that really didn't play out. With head and shoulder formation here, that really didn't play out. We also had a little tiny head and shoulders right here. Very, very interesting to note that really didn't play out. So there could be allegation, there could be, speculation and everything else, but without these things fully confirming, especially when you're looking at a weekly chart here, without these things fully confirming, what it really gonna do is gonna be hindering. It's gonna just inflict fear. Before it actually happens. A lot of times this market uses fear to climb higher. So, but then, looking at this weekly chart here, obviously, a lot of times head and shoulder can be more, can a lot of times form in a symmetric way. So this was an important pivot. If this was a left shoulder, obviously, I think this would have been where, you want to see the right shoulder building. Though I've seen head and shoulders that build like this, so there's still a chance that it can build. But then again, let's work with the tangible data at hand. We still don't have that. For this head and shoulder to be fully confirmed, you would want to see this thing coming all the way down to about, let me actually look at semiconductor index itself, coming all the way down here, all the way to about 550 or so, 560. It's interesting to note that actually semiconductor index itself, we're actually right at that level right now. Not on as an ETF, but on the semiconductor index itself, we're right at this level. So that's actually kind of interesting that we have, again, but let's wait until, before we assume anything, before we speculate anything, or, bring charges against the semiconductor here. Let's make sure that we see a full confirmation, because it's gonna always throw up head and shoulder formations. You know what I mean? So right now I don't want to just say, hey, that's a formation that we don't even have this yet. If we start to see this, I think then there would be a problem. But even then, you want to see this thing do that, and this is where the head and shoulder is really gonna just show its power. When it gets confirmed, go back and retest. This is all support, become new resistance. When it gets rejected, this is where semiconductor can see a huge correction. But we're not there yet, though. So obviously, when you're doing technical analysis, there's always gonna be bullish, bearish signals that you can look at. So obviously, you gotta know which one matters more, and then put more weight on that. But really, though, monthly chart is what brings me back to semiconductor, and why I think semiconductor is very, very important index going forward. This is a very, very important level. Obviously, we had that, the bubble there, .com bubble. We crashed, and when you see a crash like that, this is how long it takes. That's what it takes. It takes almost 14 years for us to recover. We even really haven't gotten up here. Right? People bought it up here. They're still in a hole after 10 years, because it came so fast. There's so much pain. There's so much, so many people got burned, and so it takes so long for it to reestablish us. We really wasn't in a trend, for a long time on this semiconductor, as you can see that. And finally, in about 14 years. We finally broke out, cultivating higher lows and higher highs, which is an uptrend, right? We came down. A lot of times, this is what happened. Is that when we just talked about this on a daily and weekly chart, when the major pivot is broken, a lot of times what they'll do is they'll come back down and retest that level as what? Old resistance, new support, and then that's when it can have a just really good move. Just have this, okay, just have this picture here, a snapshot on your brain here, right here. You see this? I'm gonna just go to NASDAQ, and then I'm just gonna go right here. Let's go back to 2012. Okay. Right here is very important level, right? See that resistance, resistance, resistance. We had .com bubble crash. We stayed here for about 12 years. So this one came up. This one broke out a bit earlier than semiconductor, right? Semiconductor is now breaking out, retesting. This one broke out back in 2012. You can see that right there, and then came back down. What? And retest this level, right? Resistance, 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 new support. And then what are we cultivating after that? Higher lows and higher highs. We're cultivating what? An uptrend. Back in 2012 May, if I would have said to you the NASDAQ is coming back up here, would you call me crazy? Okay, you don't know anything what you're saying, man. This thing is gonna going down, bro. This is gonna go to 11,000, 1100. The whole market is doomed, bro. We're gonna see a global market collapse, blah blah blah, right? And if I said we're coming up here, you'd be like, well, you're crazy. Well, that's exactly what it did. See that? That's exactly what it did. Right? So if we go back to semiconductor, will you call me crazy when I come back up here? That it's going to continue to cultivate uptrend. We're going to come back up here, recover all this. Would you call me crazy? It's a possibility that it can happen, right? It's a possibility that it can happen because for the fact that we came out of this accumulation phase. It took so long. The longer the base, the bigger the base, actually, the better it is. The trend is that much stronger. It's like building a, building a building, solid, big, long building. The longer the top, you need a solid, foundation for this to go up. So this is actually a very good foundation. It took, obviously, again, 14 years of cultivation, accumulation, right? This is what we call accumulation phase, public participation, and a distribution phase. So we gotten out of accumulation phase. You want to talk about Weinstein's stage analysis. This will be a stage 1, then stage 2, stage 3, stage 4, right? So this will be a stage 1, stage 2, stage 3, stage 4. So we're on a stage 1, came out of stage 1, we're in a process of stage 2. And I think semiconductor will get up here. Matter of time, the question is when, right? Because we have such a great setup. Obviously, any setup can be failed. Anything can go in the market. Nothing is absolute. Nothing is guaranteed. All we have is a probability game, and that's exactly what I'm talking about. I always have to remember. I always have to say that because some people just, believe everything what people say online, right? I'm talking about this. A lot of people listen to me, but don't believe everything what people say online, right? Don't believe everything what they're saying. Do your research and come to your conclusion. Just don't blindly believe everybody, including me. Let's look at S&P 500. So again, semiconductor looks great, and obviously something that looking at a candlestick analysis. This is what we call Morningstar Reversal. Okay, and it's not fully confirmed as of today. Obviously, this is a monthly chart. So October's on unwinding here. We just got another week and a half to go. So let's say let's just say today's end of October. This is a great sign because you can see that we have bearish candle. It looks more like a kind of a hammer type of deal, right on the monthly 50 MA there. And then we threw that like a high wave doji or spinning top, and then we have bullish candle. That's what we call Morningstar Reversal, right? Bearish, doji, bullish, right? See if I can find any kind of yeah, something like this. That would be a Morningstar right there, bearish. Little, that's not really a doji, but something similar, like a little tiny candle, and then bullish, and we see a follow through, bang, right? So we need to see a follow through. So another month, let's say by end of November, we see something like that. That's definitely a follow through. Then after that will be confirmed that Morningstar reversal, and there's a good chance that that will continue higher, and that will be a kind of a primary to higher low there, right? So semiconductor starting to look very, very good, especially in a more of a long term basis, and so I'm going to continue to watch that. Let's look at S&P 500 here. Looking at a daily chart, this was some of the levels that I've been talking about on these videos. Obviously, this is a level right here. We talked about that anywhere below 1990-ish or so. This is a level of fear, and then this is a level of confusion below 2000. Confusion, because this is a weird level that both buyers and bears are a little bit confused. Like, what is it gonna do? Like, I mean, are we seeing a market reversal, or is this a faking all the bulls out before the whole market crashes? So confusion there, and obviously, I'm talking about in a general sense. I'll tell you what I think about where we're at, but in a general sense, this is a fear level. This is a confusion, and I've been talking about this for a few months now, and this is where I'll call it confidence or reversal territory, right? So if we're above 2050, it's interesting to note. It's interesting because when I start talking about these levels, when we're like down here, because that's what I started talking about these levels, like nobody want to listen to it. Like nobody want to listen to me what I was have to say. So it's interesting to note that like I write certain articles. I always do this, and I just just trying to figure out the psychology of people. Look at my articles and things. It's just psychology of people in general, traders, investors. My old articles that I wrote, like down here, looking at some of certain things, and let's say played out, then all of a sudden when I call things and then it hasn't played out, obviously needs some time. It takes like a couple weeks or whatever, and then when it actually played out, talked about double hammer deja vu article that I wrote like maybe a week ago or a couple weeks ago. When I first wrote it, there weren't a lot of hits, and then now the market is starting to get up, then they get a lot of hits now. Isn't that interesting how people are, is that they don't want to pay attention when somebody say things before the fact, but afterwards they tend to, just like, oh my God, like he called it, whatever. Because that's not what I'm trying to do, though. That's why I want you guys to understand that our job's not calling things. You guys understand that? That's not our job. Our job is to just trying to forecast as much as we can at the high probability outcome. You know what I mean? Any weatherman can have a wrong forecast, and we can always have wrong forecasts on things. But anyway, so we're getting here, and then this is a very, very important level that we gotten above. So, we are cultivating something here in the minor to intermediate term. Obviously, if we just kind of look at this right here in a line chart, we can definitely see certain higher lows and the action coming up here. We definitely got higher, something like that. So we are some sort of a cultivation happening there in the more of a bullish sentiment there. Obviously, we are getting back to certain important level here. We do have 100 SMA coming in today. We did see a bearish engulfing pattern there, but that we, because of this bearish engulfing, looked like some kind of a hold up there, and then today we failed. So that give us that little bit of bearish sentiment going into tomorrow with the bearish engulfing pattern. But I will watch that 10-year for the next support, because the 10-year did act as support back in October 14th. So 10 EMA on the daily chart is going to be the next one, and then after that we 50 EMA, which is back in 1997 on the S&P 500 index, which 50 EMA did act as support here. 50 EMA was resistance up here and then act as support there. So some of these moving averages is going to act as support. The worst case scenario, we might even come down all the way to 1993, where this is important support level is. Obviously, we want that level to hold before getting back up. So some of those levels we'll watch the next few days. But if you really want to gap back into the market and you really think that, hey, this could be a great opportunity, which I talked about last week, then I think anywhere above that level is the level that I think really the buyer is going to find a lot of confidence in the overall market. Interesting to note that looking at Okay. Let's get rid of RSI. So MACD just crossed right there. So you can see that they could look at that as a support. And this was the last time there. We threw that hammer and we had that follow through. MACD crossed right there on this weekly chart. We had this is the article that I was talking about, that double hammer deja vu, because we had that here, we had a follow through after that, and then we're now just getting that cross right there, right, while keeping this rising uptrend support. We actually just established that just with the recent move last a month or so. Right, uptrend support, it has been established. The hammer candle right over there, that has been confirmed. Now moving average is also endorsing this move. So things are starting to get a little bit more and more bullish. Again, looking at more of a longer term. I'm not talking about next day or two or even next week. I'm talking more about longer big picture, that things are starting to look more and more bullish there. We actually did have a daily chart here. Let me go to daily chart right there. This is a bullish divergence. I mean, it's not a textbook bullish divergence, but you can see that it's like an equal lows, and you can see on MACD that's a higher low, and that was what we're looking for here. Here, I'll give you this chart that we're discussing. This was back in here, so you can see September 28th. Obviously you can see the candle, it was this day right here, this day right there, right? That day is this snapshot is all about. Hardest thing as a technical analyst, if you are using technical analysis to trade for your own account, or maybe for others, or for your institution or whatever, is hardest thing is looking at this here. And obviously anybody can be bearish when the whole market is rolling over. Anybody can be bullish when the whole market is going up. But are you able to, despite the fact that certain things you see, are you able to see certain possibility of outcome? I'm not trying to call things here, but what I realized, this was definitely a warning signal, because we got hit. This was important support, the 2,000 level. We need to get above it. Again, this is a fat minute, and just things didn't, people didn't like what they had to say, and then we came out again. This was when 50 MA was coming down, and then we just tanked. And this is important level for bears, because bears want to make sure we get a lower high and then continue lower, thus creating the market crash or steep market correction. But what I found is MACD is at a level or territory of a higher low. And then again, looking at the weekly chart, monthly chart, I thought, hey, there could be a chance that we could potentially have some kind of bullish divergence. And I wasn't calling things like nothing like that to my members. Nothing like, hey, I'm calling this. We're gonna get it. Like, this thing is gonna go. Like, we're gonna mark my word. Like, this thing is gonna just freaking you know what I'm saying? Like, this thing is gonna go. Like, we're gonna just bounce. I know it because I have a crystal ball. That's not what I'm saying. Hey, MACD is interesting to note that MACD is not creating a lower low, or it's not getting closed down here. We're actually up here on MACD, and we are kind of in a territory of bullish divergence. I want to watch that. And the reason because I want to watch this is because it happened before. Right there. Do you see it right here? And do you see it right there? Right there. Right here. Right there, right here. Both times that's a correction, right? Here, 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 here. And I'm not saying just because it happened before it's gonna happen. I say, hey, there's a possibility that it could happen here again. And that's exactly what I'm saying. There's a possibility, but I'm not sure yet. That I want to see some kind of evidence of that. I need this to be substantiated from the price action, right? And you guys remember that I wrote an article here. This one was top. Again, that day I wrote an article here. We're back down to the lows. You guys remember that article is back at the lows, while it was potentially that support level, and that's a level. It was an important level back then here, and we're back at that important level here. That's what I was talking about on that day. This was an article that I wrote, and the other chart was obviously for the members. and then as we start to see the price action start to get up very, very fast, you see that how we created that bullish divergence on the MACD. But I wouldn't have really, you know, gave that a lot of weight if I go back in history and if I didn't see any of those. I'm like, okay, so you know what, I'm not gonna put too much weight on that. But because we've seen that happening before. Why? Because traders and investors tend to react in a certain way when the market does a certain way. I mean, I explained this many times, is that just like you and I, we're human beings trade this market. Everybody trade this market, and they're human beings. So what happens to human beings? That, well, okay, so let's just example. Like I said this many times, but I want to say it again. Let's say if you're sad, you're depressed. There's certain things you're gonna do. You're gonna go get an ice cream, or you're gonna watch a movie. You're gonna go out for a run, sauna, hot tub. Whatever, there's certain things you're gonna do to remedy that situation. The market is kind of saying certain same way. Obviously, it's not gonna always do the same thing, but when the market starts to see fear, there's certain things it's gonna react. And a lot of times that repetition, that pattern can be seen on this MACD, and that's exactly what you're seeing, this bullish divergence. Really, technically, what's really happening is what it's saying is there's a clandestine buyers. These are what I call value buyers, bottom callers, dip buyers. You know, a lot of times these guys are usually not a long term, but when they start to see that there's something happening, they usually stick around. And that's how we create that bullish divergence. Hope that makes sense there. So, let's go to Dow Jones here. Obviously, again, we just looked at long term. One other thing, I just wanted to show you guys on S&P 500 index. This is a weekly chart of parabolic SAR. Basically, what it is kind of a momentum swinger thing. I don't usually put too much put weight on the parabolic SAR, but when you have like a price action start confirming things, like oscillator confirming things, this is the last kind of a checkpoint that you want to look at. So you can see obviously the weekly hasn't ended yet. Obviously we still have 2 more days, but if we can we don't have any dramatic sell-off or nothing like that, we can able to just hold up above at least pretty conservative, like 1990 or so. This is gonna stay on. So parabolic SAR just flipped to the downside. So if you just look at this historically, once they flip, they tend to stay quite up. Again, it's a weekly chart, so each circle, it represents weekly sentiment. Each circle is 1 week. So if you look at this and just kind of do your probability thing here, once it flips, it tends to stay for a while. And we just flipped on the parabolic SAR today on the S&P 500. I know that Semiconductor has been flipped for a while. I'm pretty sure it has. So it's been 3rd week that Semiconductor has flipped. I know, let's see, NASDAQ hasn't flipped yet. I think Q's though has flipped. Yes, Q's been flipped for 2 weeks already. And so let's look at Dow Jones, see if it was flipped. Yes, Dow Jones has been flipped for 3 weeks now. So you can see these things are starting to support the buyers in the long term. So that's kind of what you want to do when you do your analysis on using technical analysis. Kind of start gathering evidence though, but you don't want to be stupid about it. Just gathering stupid as evidence and say, hey, I got this evidence, we're bullish. No, you want to make sure which one is, toss it, which one is important evidence. Obviously, price action is the most important evidence that you have, and then after that, you want to substantiate that with, not substantiate that, but have a confirmation or subordinate any kind of signals like the indicators, any, MACD, parabolic SAR, all of that is just like subordinate to the price action. Because we have a price action we've seen last couple weeks, we can able to kind of go through these different indicators and kind of confirm that price action there. Actually, let's look at Russell 2000. I haven't looked at it on this parabolic, see if it flipped or not. Yeah, Russell 2000 just flipped as well. We have 2 parabolic stairs, so let's see if that's something going there. Let me just look at Russell 2000 real quick and end this video. Well, we'll look at Apple real quick. I don't want to go too long today. Russell is actually the weakest link out of all the indices. We're just kind of just having hard time getting above this level. We saw a little bit more weakness here. I think it was Russell kind of dragged down the whole market today as far as the daily is concerned, daily intraday action is concerned. This is kind of an important level here, looking at the Russell 2000, and after that is right about here. So 50 MA continue to act as resistance. That's the thing about it. All the indices were already passed above 50 MA, and we're trading around 100 SMA, which is right here on the Russell. But Russell is just still, having hard time here, trying to get above that level. And so looking at a daily chart here, there's still quite a bit of bears sentiment going to intermediate term, right? Still a bearish sentiment going into intermediate term. There we're still kind of respecting this uptrend though. You can see that there and here and here and here. So that's kind of what we're looking at here. But the Russell 2000, what we want to see on the Russell 2000 is getting back above, first things first, obviously, about 1180 or so. If we can get above that, I think next level of a pivot will be 1225. We're still in a fear zone. This will be a confusion zone. Then this will be kind of a reversal zone there. And for the buyers, anywhere below this, obviously, is a panic level. But because other indices are kind of staying at this kind of this level right here. So I think still looking at all, because we can't just look at Russell and say, hey, this market is really, really weak. I mean, obviously, we are dealing with very panicky, kind of fearful market here. And I would say that we're getting into the confusion level now where people are like both bears and bulls are kind of starting to getting confused, while the buyers are starting to get a little bit more momentum here. So I think Russell 2000, if the market, if the other indices start to get up, I think Russell 2000 will find traction back up here. Probably can get up to this to this zone right about here. So we'll continue to watch that. So let's look at Apple here. Apple, obviously, before the ER, obviously this happens on the, this is an important level right there. So we gotten above this level. I just wrote an article on Apple yesterday or 2 nights ago. 2 days ago, and we broke out, and then we threw a little bit shooting star there, and there's no surprise. Seriously, there's no surprise. We're earnings coming out next week. I think it's Tuesday after close. Please check on that, confirm that. I'm not sure exactly for sure if it's Tuesday or not, but and then we see a follow through here. So really, I think it's just probably gonna hover around in this vicinity until the year. A lot of times Apple do this before the year. It will just kind of hover around. And then when ER happens, then something could possibly happen. It will get up above that or not, right? So we're just still kind of holding this level. It's an important level. Looking at the oscillators here, I mean, I talked about it on my article a few nights ago, or weekly chart here. So we are seeing that we haven't crossed yet. I don't think it's gonna cross until after ER. So it's just, we're not sure what's happening here. There's still a confusion. Like, is it gonna be some kind of massive head and shoulders here, or is it gonna be a reversal? I think this is an important level right there. So I mean, anywhere above this level, I think this is gonna be a kind of a reversal zone there above 120, which I've been talking about for weeks now. Above 120 is probably you're gonna see a lot of confidence on Apple. I still, again, if you ask for what do you think about it? I like Apple here. I liked Apple several months back. I like Apple here. Again, I'm talking more longer term. You know what I mean? I still think that Apple can get up to some of these levels. But obviously, before we can get there, we need certain levels to be conquered by the buyers. And obviously, those are 2 levels. This is important pivotal resistance level that we need to get up. And there will be probably a battle. But I think, depending on its earnings result, it could just gap up and stay up here, and that could jumpstart everything. So it will be very, very important what happens on earnings on Apple. And if we can get above 120, I think, then I'll write you guys another article on Apple that, with the target price where I think it's going to go. And we'll go from there. Look at Tesla. I really never liked Tesla. I've been telling you guys I don't like Tesla. It's iffy to me. What's happening here? It feels like it's gonna stay in a channel for some time with a lot of hype on move. So I don't wanna trade Tesla. And now things are getting more uglier. You can see that we got now a lower high. We can't even put in equal lows, and we got an intermediate term lower high there, and then just a lot of like just very fast move, because Tesla is just one of those move that it's one of those things that just get hyped up and then it gets like dies down, get hyped up again, dies down, get hyped up. It's just a lot of volatility, just not a long-term vehicle, unless if you want to just do a quick swing trade here, swing trade there. So then maybe it's more of a right vehicle for you, but it's not for me. I like the whole thing 6 months to a year, and maybe even 2 to 3 years, some of the longer term strategies that we do here. And so at this point, looks like minor term bearish, intermediate term bearish, obviously major primary term, bullish. We're still kind of in the sense of uptrend, but like really more of a neutral type of action, what's going on here, which this could even turn into a major topping pattern. But I don't think that's gonna happen, though it could, but I don't, at this point it's hard to say. I just want to stay away from Tesla there. I really don't feel like working with that. You know what, might as well just go through all of these. Let's look at Google. Google, that's us. Google, I recently read an article on Google. Let me just pull that up. I think it's just kind of read. So let's see, here's the website, and Google getting ready for a big move. So you can see that, okay, so some of the patterns that we're looking at here, right, pattern analysis, here, oh, resistance, new support, bang, right, resistance, new support, bang, right, resistance, new support. That's what we did recently. Oscillator analysis, again, this is looking at a monthly chart, there, and just look at this thing, monthly 20 simple moving average, just acting as just clean support every single time for about 4 years there. We just gotten above and cleared the resistance right there. That's awesome to see. Looking at a more long-term perspective, right, there's bigger view for you. And then obviously the most important part was this one, is that we are forming some kind of a bull pennant pattern on the monthly chart. And these pennant pattern, when they break out, they can have a pretty good side outcome there. So if you want to detail read this, you can go to my website there and then read that. But let's look at like monthly chart real quick and see what it looks like now after I wrote that article. So this is the monthly chart there, so you can see we're not quite sure yet if we're breaking out or something. We got a little bit of wick there, so that's we'll have to watch it a little bit more. But looking at daily chart here, obviously the Google, we're well past that. We have confirmed that we got some kind of a double bottom type of deal. This is a neckline, so we were kind of retesting this old resistance as new support. We do have earnings coming up, I'm pretty sure, on Google, and probably there's a little bit of shakiness in the sentiment of this traders, investors. It's just kind of trying to figure out what's going to happen on the earnings. I think that's what's happening, but looks pretty much very much bullish to me in a big picture of things, and I think Google is going to way to go. Next year or two. Netflix, Netflix starting to look just kind of a lot of just volatility here, starting to see. We got a little bit of resistance coming down. I think I would like to maybe buy above 114.59 to the upside. Downside, I don't want to go downside. I don't think I want to go downside Netflix at all. Netflix is such a great company. It even looks very bullish in the long term, and even in minor term looks bearish. Obviously, that if we lose this, we might come down here. So you can look at that. Finally, Amazon, and then we'll just close this. Amazon is in my opinion, still bullish, very strong. Uptrend support has been established. This is important pivot. We may come down to retesting that level. We're just kind of doing that, possibly gap back up there. I don't think at this level, I don't think I want to do anything long term. Because you want to do anything long term, this is a level you want to do long term right here, right? This is a level where it comes down, important pivot, resistance support. That's where you want to go long term. That's exactly what I'm talking about on Google. This is where you want to go long term on Amazon, right here, and then hold through it. But up here, it's tough to go long term, but more of a short term there. So I thought I'll just kind of look at some tech companies there, and those are the ones that I kind of look at a lot. And so I'll just go through those and let you guys know what I think about it. But anyway, I hope you guys are enjoying your night thus far. Wednesday today, so Thursday, Friday, 2 more days to go. It'll be interesting to see how the market reacts this week, and kind of look at the weekly sentiment there. And then I want to advise you that weekly sentiment is probably more important than on daily fluctuation at this point. So it would be important what it closed with on the weekly chart, and then go from there. I think that would make much more sense, because we're dealing with a prolonged uptrend in the indices. Look at your weekly chart, look at your monthly chart, and then you kind of really have to look at all those, and then keep in mind, keep everything accounted for. But we can't just look at daily fluctuations and let our emotions do the talking, but really have to see what is the market conveying. What's the sentiment right now, despite of your emotion or fear that is in the market, what people are shouting out in the Twitter and stock Twitch. But what is it really the chart saying? But we gotta be fair about it. If you're not fair, just because you're long on semiconductor and you're just gonna grab every single bullish data and then you're just gonna argue about it, then that's not being fair. Even if you're long on semiconductor, hey, what are the potentially bearish sentiment there, right? So those are things that I think it takes time to earn, and I'm sure you guys will get there, as long as you keep working at it. So, well, I'll end the video. I'll talk to you guys next week, and hope you guys have a great night.